let's say that I just started because in Finland there was no other job for me and I couldn't speak Finnish, so, but stock markets, they just speak the language of money, so that was one way for me to earn some money there. So that's how I got started, and I made some money, lost some money, so I'll share some experience here, how you can maybe get started. So let's start with the positive ones. So some war stories in the market. So like when I came here, Nokia was really struggling a lot, and I had some pocket change left, so I bought Nokia stocks, thinking that there were rumors that Microsoft would take over. And well, it turned out that they did, and I made about 90% of my capital. That was like big thing for me because really I was just working as a part-time menial job, so I was making $10 an hour, and there with this stock thing, it just went boom. I was like, wow, maybe I'll just quit that job and look at the stock markets. And then I had some good run, or like let's say, I got a good hot hand, like a winning streak. So with 3D systems, I just also mentioned about 3D printing. So that's one company which manufactures 3D printers. I bought that stock, and I remember that within 1 hour, it went $8 up, and I bought 100 of them. So I made $800 in 1 hour, and I was like, wow! I couldn't believe my eyes. And my wife was like, sell it, greedy ass, you greedy person, just sell it now. And I was like, maybe it will go higher. But whatever, I sold it off, made $800 in 1 hour. So, and with Facebook also, they were going to announce their earnings report, and I bought it before that. It went up $700. So I was really like, wow, I can make $1 million. But then my beginner's luck started to fail. And then what the hell did I do really? Like, I'm just embarrassed to even say, like, really, I was nervous, I was scared to death, and I was losing my money like anything. I bought Tesla Motors, and Elon Musk, they were releasing this dual motor. Anybody follows Tesla Motors here? Okay, cool, we have so. So they were releasing their dual motor car, and they were going to announce an event. And I bought the stock before that, and like the night I fell asleep, and I was still checking on my phone that when will the event come out. So the event came, and yeah, it was, Wall Street was not happy with that. The next day, the stock tanked like 10%. It just collapsed $20 per stock, and I had 100 of them. So that morning was just so terrible. I lost 2,000 in a night, really. And it didn't stop there, and it was just dripping down, and I was looking at my screen, and the stock was going down. I was just shaking out of fear. So with stock market, you'll also get to know about yourself as a person. So, and also I had some other stories, but yeah, they're just so embarrassing that I better not go there. So then my beginner's luck really, it ran out. I lost almost what I made. And the first month that I did, I made about $5,000 in a month. 2,000 went to the Nordea Bank because of transaction fees and whatever. But still, I thought, wow, that's like a shitload of money for me. I can do it, but like I said, it just failed very soon. And so, but now some more thoughts. So why trade? I think like trading is like your own business, like a startup. Everyone is familiar with startups here, so maybe you can relate to that. Because it's risky, definitely, but it's ultra competitive, highly competitive. Like hedge funds are there are algorithmic trading is going on, or let's say machine learning is being implemented there, so ultra competitive, that's fine, even startups are. And I think there are more similarities. For example, like there is a discovery phase. You discover your own edge in the market, just like in startups you discover your product service, it's fit with the customers. So I think there is a lot of like similarities between trading and startup. And of course, one good thing is like you can borrow a lot of money for buying or selling stocks, which is called leverage. So banks are willing to lend you money to buy stocks. Whereas in a startup, you have to beg an investor that please give me some money for that. So that's a good thing here. Although on the bad side, you don't really create something new. In trading, you just create strategies, not some product or service. So that's the downside here. I need to take a breather. Okay, so.
Just go down.
Yeah, so I just wanted to say, like, what kind of people are attracted to stock markets? One type is the thrill seekers, but probably they're bored and they just want some fun out of the stock market. So it attracts different types of people. One are the thrill seekers. I've worked with a friend who was just like, oh yeah, we have to like buy this one. Oh my God, it's going up or down, whatever. He made a big drama about it. Maybe he was just bored. So I've worked with a thrill seeker. And then next are the gamblers. They have no idea about what is a risk reward. They have no idea that the stocks, they're like as if lottery tickets, or they just throw dice and they will think that they will win while the odds are stacked against them. So they don't understand that. Maybe they're also kind of thrill seekers, but they do it just for the fun of it. And then next are the greedy types, which I was maybe at some point here. So they just do it just for the sheer love of money only. So yeah, I think we can all kind of relate to it, how we were at some point a thrill seeker or a gambler or a greedy type. And then last one, which I hope everyone would get to it, and and I think that I'm kind of stepping into that role, which is like the scientific type, where you see stock markets as a puzzle and you just want to solve it just for the sheer happiness that, wow, you can kind of predict the future price movements. And so I think this is the right approach, that you don't think about the money, you just think about solving a puzzle. So how can you get started? Or if you want to take that risk, of course. So get a brokerage account. I guess everyone has a Nordea account or a Danske account. So, and it's free, that's the good thing. You can get started for free. And I think that, so you just go on your internet banking and you can click that, oh, I need a brokerage account, and they'll open it for you. You can then trade stocks. And the good thing is that you can trade many markets, European markets or American markets as well. And so then next would be like, you need some money, definitely. So you can either have your own savings or ask family perhaps. So I used some money from which I borrowed from my family and some of my own. And the next thing is like, do some research, maybe think about what kind of company you would like to invest in, or maybe you can think it just in mathematical terms that, oh, if the market has gone down a lot, maybe it will go up or whatever. So it needs to be some research behind that. So you can get started really easily, and I think there's no barrier to entry, just like in startups. Anyone with a computer and some knowledge of programming, they can have basically their own startup. So I think trading is also similar in that way, that you don't need any kind of sophistication, you just need a brokerage account and some money to get started. But yeah, now where things get difficult is that the learning curve is really steep if you're not from a finance background, like I was not. So there are so many things to just learn and keep learning basically every day. So a lot of terms there. So that's like, what are bulls, what are bears, what's a bull market, bear market, or we all know about stocks, but there are many different things that you can trade, like options. Anybody heard of options? Okay, futures. Okay, you know that's good. CFDs. No, okay, but whatever, like, and ETFs. Probably, it's a contract for difference. It means that you really don't buy any asset, you just trade the difference of it. So kind of like somewhere between futures and stocks, but it has its own advantages as well. But of course. So yeah, a lot of terminology that you need to get used to and learn a little bit. For example, what's leverage, what are ETFs, what are leveraged ETFs, and what is volatility, and what is an ETF that is based on volatility. Is the volatility short-term, long-term, and then there are inverse ETFs and whatnot. So you just need to learn a lot to get kind of to get somewhere. Of course, you can have the beginner's luck like me I had. So that would be, of course, it's positive, but in the long run, if you want to be successful, I think it's good to learn. So here's a short thing that I wanted to explain, that most of us, we are familiar with something known as the long position, where you buy something first and you sell later. So for example, if you bought at 100 and the stock went up to 120, so you made that difference. But what at least I didn't know about, was the short position. Is anyone familiar with that? Oh, 1 and 2. Oh, more, that's great. So you sell first, which is kind of tricky to understand in the beginning. You sell a stock which you don't own. So you sell first and then you buy later and you make the difference. So you're betting on a stock that will go down or the market that will go down. So in some sense, kind of, it's quite beautiful as I see that you can play the game both ways, while it's going up or it's going down. But yeah, here's the best part that I think I've experienced now after about 2 years, that it really takes a lot of time and effort for you to learn things, and then you'll realize that most of it is just noise. Think about it, even in your life, most of the things, they just turn out to be noise. So try to cut that down. And yeah, so I just tried to put a few things here. I guess I already introduced them. But for example, for futures market, you can trade a lot of things, even livestock or grains. And with ETFs, that's a whole different ball game, so you can do a lot. And CFDs are really nice, just like you were asking, because you can leverage a lot, meaning that you can borrow money to buy some asset for which you might not have the money in cash, but the banks are willing to lend you the money. So, for example, you can buy oil or currencies, or even some index funds. So leverage is really good about it, that you don't have to beg an investor to give you money. And I would say, like, avoid penny stocks. Have you ever heard about penny stocks? Okay, maybe from this Wolf of the Wall Street movie. Everybody knows about penny stocks from there. So try to avoid those. But yeah, or maybe stick to just large cap stocks like Nordea or whatever, like Tesla or Facebook, Apple, Google. And yeah, this is about trading styles. What are at least the 4 that I know of? One is this macro, where you think about the big picture stuff. What would be the, like 3-4 years or 1 year down the line, what would happen in the economy. So if you think that Europe is collapsing, you can short European companies. Or if you think that emerging markets are going to do well, so you can, let's say, buy China or India or something. So these are like a big picture events that you anticipate. For example, if anyone would have anticipated that oil is going to go down really badly, so you could have shorted oil futures or oil CFDs or oil ETFs, and you would have really made a lot of money. And I think then the fundamental thing, it's more like from an accountant's perspective, that you check a company's sales, profits, and the liabilities or debt or the product, service, IPR, and that kind of stuff. And so you kind of value the company by its financials. But to me, it was like I'm not an accountant, and I still think that there can be a lot of corporate fraud. So I just gave up that thing. I don't do it anymore. So then I jumped into this kind of technical plus quantitative style. So technical style means that you find trends and chart patterns. And so there's a lot of kind of, I'll show you in a chart what these technical terms mean, the moving average or relative strength index or Bollinger Bands and whatever. And the quantitative style, it's like, any mathematician here? Oh, so you must have studied about time series analysis and statistical modeling. So that's a whole different ballgame, and hedge funds, they love to hire mathematicians or computer scientists so that they can learn, or let's say implement intelligent algorithms to find out inefficiencies in the market. So if you're math or kind of, even physicists are hired by hedge funds So if you can really do some good risk analysis or time series modeling, so maybe Goldman Sachs might hire you, or you can have your own trading firm, let's say. And then I think there are a few different trading styles also. What is mean reversion? It means that you buy the dip and sell the rip, as they call it. So you buy low and sell high. That's kind of mean reversion. Well, not exactly, but let's just say it's that. And the other one, which is trend following, is like you buy high and you sell higher. So I'm not sure, I don't think so. I can explain it really well right just now with a few words, but and this is quite interesting, trend neutral. They just don't anticipate what will happen the next week or month. They just say that what's going to happen in 24 hours. They think that stock markets, they're like weather forecasting. You can know what's the weather going to be like tomorrow, maybe not in 1 year. And of course there are holding periods, which means like you can day trade, you buy today and you can sell the next minute or next hour or the same day. So I've done that, it's really miserable. You'll be just basically sitting by your screen for 8 hours a day, which I still do. But it's quite miserable and you'll just lose a lot of money. Swing trading is something which I like, and I've been kind of trying to perfect my game in that. And then others are more like, I think, my friend Turku. He invests more for a longer term, as I understand. Yeah. And then I think, like I already said in the beginning, that there are stages as you discover yourself and you learn more and you become better at it. So I think the first 4 to 6 months, they're like what I call the honeymoon period. You're like in love with the market gives you money and it's a blessing, and you think that, oh, I'm the master of the universe, I can make a ton of money. And well, maybe you'll even think that I'll quit my job and just trade full time, which I thought, but then comes this other period that where you get burned, your ego gets crushed, and you feel just so humiliated by the stock market. And every time that you make a decision, it's wrong. Believe me, it's so hard for us to just admit that like everything that you do is just wrong. Because I think like since we are being students, or we are students, and or if we are being in a job, we are appreciated for our good grades or good work. So we feel that our ego is getting boosted, but stock markets will really crush that. But only if after that you can maybe think that your real journey is starting to become a better trader. And again, like I mentioned already in the beginning, you find yourself more. What kind of person are you? So are you this type of extremely money-minded person? And I think our emotions work also in different ways. For example, fear. When you are losing everything what you have, and really you didn't calculate enough things and the market goes against you, so you end up in a position like that, and then you start hoping. Then you start to hope that, oh my God, just it will go up, and you close your eyes, you're so fearful that I lose all of my money right here, and you become hopeful. While it works counterintuitively, that you should get fearful when you should hope. And when you are hoping, actually, then you should be fearful. So it's kind of, maybe you're not able to relate to it, but believe me, if you have some trading experience, I think you'll like kind of find that there is some truth to it. One more is that, like I said, ego. Ego is, we all have massive egos. We might not even realize that, but stock market, it will just show you what your ego is, and it will just keep punching it until you feel completely like a low lifer, really. You won't, I mean, I'm just sorry to say that you lose your sleep. You won't be able to sleep, and you will just dream about numbers. And so my advice for beginners is that read books and blogs. Read blogs more. I have a slide where I've kind of put some of the best blogs that I follow and read, and observe the markets. Build your edge. That's really important, that you need some sort of method to it. You just don't roll a die, or you just don't try to gamble with it and trade small sizes. That's very much better than trading a large amount of capital in the first go itself. And I think passive investing might be much better for you all, where you just buy and hold. But it might not work for some cases, which maybe I'll just show in a moment. Index ETFs are also good, but yeah, whatever. So some of the tools and resources that I use, I guess if you're not familiar with them, so it's no point in explaining, but it's good to go through these blogs. I think there are some writers here, they have at least 10 to 20 years of experience in the market, so they write their thoughts, and it's really good to understand from that perspective. So thank you very much. Maybe I'll just show one little thing. Yeah. Okay, so this is one software that I use. It's free, you can use it, and you can build a watch list that you want to follow. This is a very small one that I regularly follow. And so this is the S&P 500 index. Anybody is familiar with that? Some people? Okay. So you can see the graph or the chart in candlesticks or simply a line, and you can, let's say, view it in a daily time frame. So it's a pretty cool software which is for free, and it gives you real-time codes. Well, not real-time, but let's say by a minute. So you can watch the market data every minute. And so this is one thing that basically I'm staring into the screen 8 hours of the day. So, and one other software that I would love to introduce here is financial visualizations. So it generates a heat map of S&P 500 and some other indexes. So you can, in one glance, you can see if Google was up today, or Facebook was up, or Amazon was doing well or not. And then we've got, since oil is going down, so you can see if ExxonMobil or Chevron, I don't know if you know these companies, but whatever, or Disney was going up. So it gives you this really cool heat map, so you can see these 500 stocks in a glance. And you can see that in the morning if the financials are going down, so you can maybe short that sector, or if technology sector is going up, you can buy the tech sector itself. So these two, I think they're at least the two important tools that I use, and maybe you can also use. So that's all from me.
I have a question.
Yeah.
Or two.
Yeah.
So all the investment instruments that you mentioned,
yeah,
including ETFs or whatever, can you use Nordea for these?
Of course, I used to use Nordea, and you can trade American markets. So you can use Nordea. Now I've switched to Danske because Nordea didn't allow me to have a dollar account. They just allowed me to have a euro account, but I had to pay this euro to dollar conversion fee every time I bought and sold. While Danske, they gave me a dollar account and I can just trade it through that. So.
Well, and then the last question is trading more like playing poker, where you don't play the cards, but you play the people across from you?
In some sense it can be, but then mathematicians, they have just reduced it to numbers. So you can do back testing. So you can look through 20 or 30 years of historical data, and you can find some patterns that repeat itself. So you can just calculate those edges, what I call. And so I think it's much better than gambling. The odds you can, it's so much in your control really, because with poker, you never know really. First thing is the cards. Here you can basically decide your own cards. So the odds, you can put them in your favor through your research.
My point was that in poker it's a skill game. It's not a challenge game.
Yeah.
Because you understand how people play the game, and you use that to your advantage.
Yeah.
So in the stock market, of course, you understand how people think about certain types of information.
Yeah.
And you can use that perspective to kind of use in your own investments there.
Exactly. So some traders, they use psychology. They try
Right.
to learn about human psychology. So they go against the psychology. For example, on 24th of August this year, the market crashed quite a lot at the open. So that it opened very low, and people were scared and they were just selling. But some more smart investors, they came and bought the market, and they made really a lot of money. So they went against the mass psychology. So, yeah.
Question, like you were telling about opening account in Nordia, which is like free for trading.
Yeah.
But you mentioned about like $2,000 of like charges or something. Was it like converting for US to Euro, or like was it something else for the transactions?
Yeah, exactly. So transactions are one thing. It would cost you for trading into US markets. It used to cost about $24 on one side. So you buy the stock, you pay 24, and you sell, you pay 24.
So is it for included for each and every like
Each
value of
and
stock, or like number of shares together?
For each trade,
Okay.
if you buy 100 or 1,000, you would pay 24, let's say.
Okay, that's fine.
But now they've reduced. Yeah, it's quite expensive, I have to say.
But for
You need more than
Danske,
50 euros to make that money out.
Exactly. Yeah, but 50 euros in the stock market, it's like pocket change, so nobody cares. In that sense, it is.
Yeah, but those small time investors.
Exactly,
and
yeah.
that's
For me,
positive with a lot.
Yeah, I'm a small time player there, so for me it hurt really. Like I said, I made 5,000, but 2,000 was taken by the bank. And in Nordia, I was trading through this euro account, so every time I was paying the difference. Yeah, so, but I think Danske Bank is okay, but their fee is still quite high. So I mentioned one of those advanced brokers, so you can have interactive broker, they just charge $1 for one. Yeah, so maybe I'll get an account there, so hopefully. Yeah, okay. So thanks for your attention. Really.